Hey, how you guys doing? Welcome back. Hey, if you're new here, I'm Jake Artelli, and if you are returning, welcome back, guys. I appreciate you coming in. Hey, today we are looking at the housing and the mortgage crisis in America, right? We got a lot of stuff in the news, talking about, we'll get into it about the 50-year mortgage and everything that they're proposing, and how the younger generation are just getting priced out of the market, and right now with real estate and the system that we're in or the bubble that we're in, um, how much more and how much longer can we go before it really collapses, right? Um, it's not looking too good, but let's get into this, guys. Let's just take a look at at some of the stuff here. You know what I mean? Like, so basically, the medium household price in America is about what, 400, around 420,000 dollars for a median house. That's average, which is up about 40% over the last 3 or 4 years. The average mortgage is now 6.3 to 7, depending on your credit score, right? And depending on if it's 15 or 30-year fixed, or APR, whatever. Um, and that basically breaks down to, it's like 2,300, $2,400 a month payments. Based on that median price of a house. And that's before your taxes and your PMIs, right? Which is a whole other issue. But basically, there's about, I would say, I think there's, the stat I've seen was 20% in the marketplace that's affordable for the everyday consumer, right? Of the inventory, less than 20% is attainable or affordable. Most of it's out of reach for the everyday American or everyday worker, the everyday person looking to get a home. Um, your rent used to be a cheaper option. People used to be like, well, this rent is cheaper. Well, not really anymore. The average for the rent across America now is about $2,000, right in that area, in that ballpark around there. Uh, so really, that's creeping up to almost a house payment. You know what I'm saying? So it's kind of leveling out, and first time home buyers are now, the first time ever, are almost 40, right? Like 36 to 40 years old is the average age of a first time home. Let that just sink in for a minute. Think about that. When I was younger, when I bought my first home, right? And I thought, well, when I bought my first home, I got out of the military, and it was like, this is back in the mid '80s. We're talking. It was, God. I was in my I was 20. I think I was like 22, 23 years old, something like that, when I bought my first house, or went and got a loan and all. You know what I mean? I went through the process, and yeah, the interest rates were a little bit higher back then. It was a whole different era, different time, but it was still a lot more attainable and a lot more affordable than it is today. Um, but I mean, even to put a down payment back then versus now, a down payment now is, it's 40,000, 30, 40, $50,000 down, just to get started. A down payment, 20% down, typically. It's insane, and it's not just, you factor in, from back when I was younger to now. Oh, cost of inflation, you got to factor all that. It doesn't matter what you factor in. I mean, it's just not correct. It's there's so many different variables in the market that have changed that, right? With investment banks coming in and investors, and other uh, corporations coming in, buying up housing to flip or resell or rent back out. Um, you know that has changed the market quite a bit, actually. So there's a lot more stuff going on. It's not just adjusted for inflation type of thing. You got to look deeper into it. Anyways, uh, let's get into this, guys, and let's get some examples, and see what the interwebs have to say today, right? See what they got to say. See how people feel, and we can kind of see their point of view. All right, let's get in this, guys. Let's go.
Housing costs are still out of reach, and another thing that your administration is trying to tackle. Many Americans, the average age of first-time home buyers are now up to age 40, which is sad. The country you and I grew up in.
I inherited that. Look, you have to understand.
Right, but let me get to the question, though, because your housing director has proposed something that has enraged your MAGA friends, which is this 50-year mortgage idea. So a significant MAGA backlash, calling it a giveaway to the banks and simply prolonging the time it would take for Americans to own a home outright. Is that really a good idea?
It's not even a big deal. I mean, you know, you go from 40 to 50 years, and what it means is 50, you pay something less from 30. That some people had a 40, and then now they have a 50. All it means is you pay less per month. You pay it over a longer period of time. It's not like a big factor. It might help a little bit. But the problem was that Biden did this. He increased the interest rates, and I have a lousy Fed person who's going to be gone in a few months, fortunately. I have a guy too late, you know, Jerome Powell, we call him too late. He was too late in everything, except when it came to before the, you know, the so-called Democrat election, which didn't work. But we're going to get interest rates down. But even with interest rates up, the economy is the strongest it's ever been. You know, you asked me, just to go back to the beginning of your question, you talked about prices. We're down on energy. We're down on interest rate. You know, interest rates are down despite the Fed. Now, if we had a normal person at the Fed would have really low interest rates, and we will soon have that.
In an attempt to make home buying more affordable, President Trump floated the idea of a 50-year mortgage in social media posts. In response, FHFA Director Bill Pulte, who oversees Fannie Mae and Freddie Mac, posted that they are, quote, working on it and that it would be, quote, a complete game changer. Now, the purpose of a longer-term mortgage would be to lower the monthly payment for homeowners. The longer the term of the loan, the smaller the principal needed each month to pay it off in full. Now, using the latest median sale price of a home from September, that's $415,200 according to the realtors, and the current interest rate of about 6.3% according to Mortgage News Daily, on a 30-year fixed loan with a 20% down payment, the monthly payment of just principal and interest would be $2,056. If you raise the length to 50 years at the same interest rate, that payment would be $1,823, and that's a savings of $233 per month. Homeowners, however, would not build equity as quickly because their principal payments would be smaller, and the amount of interest paid to lenders would be 40% higher. Now, the real question, though, is can Fannie and Freddie do this? Analysts say it is possible, but a 50-year mortgage does not currently meet the definition of a qualified mortgage under the Dodd-Frank Act, which provides investors with a backup from Fannie and Freddie if the loan should go bad. But regulators were given the authority to change that in order to ensure mortgage affordability. That, however, could take up to a year, according to Jarrett Seberg of TD Cowen. Seberg notes that we still just really need more housing because without more, home prices will continue to be inflated no matter what the mortgage rate is.
In a social media post, President Trump floated the idea of a 50-year mortgage. Now, it comes as the average age for a first-time home buyer has climbed to 40 years old. How would this work, and why is the president considering this now?
So a 50-year would work a lot like the 30-year does. You would just repay that loan over 50 years instead of 30 years.
Okay.
Not a lot of credit unions or banks offer it, but if the White House were to endorse this product, you'd likely see a lot more availability. Remember, FDR's administration was the architect of the 30-year going back to the Great Depression. You asked why now? Owning a home is cost prohibitive for many Americans. It goes back to affordability. I was looking at this Redfin analysis that says the average U.S. home buyer spends 39% of their income on their housing, and 30% is considered sustainable. And that just keeps going up and up, Nate.
So you mentioned that affordability, but what are the pros and cons of this?
Okay, so in the near term, it would be more affordable. The pros of the 50-year is a lower monthly payment, easier qualification process, especially if you're lower income, and just more money to spend in your budget on other things. The monthly payment is really important. I crunched the numbers for you because you know I'm a nerd.
Of course.
$500,000 mortgage, 6% interest rate, okay? You would pay over $400 less in a monthly payment on a 50-year mortgage than a 30-year mortgage.
But
That's
Kelly,
pretty significant.
What about the long
Exactly. That's the con, right? So it would mean a lot more interest. In that same scenario, you would pay over $450,000 more over the length of your loan. That's as much as your mortgage loan would be. So it's really about owning a home is longer for you, further away, building that equity. I think the critics say, hey, you would die before you would actually own your home. The proponents say, well, that's better than never getting the chance.
So, my opinion, I think it's a horrible idea, and we're going to see some more opinions. I'm going to give you some different varieties of how, there's some pros and cons and different opinions to this particular subject. I just think, to myself personally, I feel that it benefits the banks, the investors, real estate. I mean, it definitely benefits some particular institutions. The individual, I see what they're saying as far as, like, I get it. Oh, maybe it will get you into a home and you can stop throwing your money away. Instead of paying for rent, you can go building towards equity or whatever. But it's such a long-term game, because typically most Americans, and myself included, I've been around a long time, and I bought and sold many houses, and typically you don't stay in a house more than 7, 8 years, 10 years, before you switch. So no one really stays in. I don't really personally know anybody that's been in a home for 50 years. Yeah, I think my mom, I think she's coming up on 50. Not quite, but I think, you know what I mean? Like, no, not quite, but getting there. So what I'm trying to say is, like, yeah, if you're younger, if you don't plan on staying in the house, but understand that mortgages are front loaded. Okay, the interest, they're going to get their money. They're going to get their interest up front. That's how they're structured. They are front loaded heavy on the interest. So on a 50-year mortgage, the first 10 years is going to be, paying nothing but interest, not hardly anything to the principal. Okay, and if you stay there any length of time, you're not really building up much equity. Not until after your 10th, 15th year, 20th, so forth. You're going to start building equity. But man, I mean, if the median age of a typical home buyer right now in the U.S. is 36, 37, 38 years old, 40 years old, and you get into a 50, dude, you'd be dead before it's paid off. Your grandchildren will be paying that off. You know what I'm saying? Like, unless you say, hey, I'm going to get in just so I have a place, and then in 5 years or 8 years or 10 years, I'm going to sell it, or I'm going to refinance it. Then you're starting over. You refinance, everything starts over, right? All this refinance. It's like, oh my God. Then you're starting the clock. Everything gets started back over. Or if you try to sell it, depending on if it goes up in value. But you don't know how the market's going to be in 5 or 10 years. Is it going to be up market, down market? Are you going to get your money back? Are you going to lose money in the long run? Would you just been better off renting? Like, think about it. I mean, it just doesn't make any sense to me at all to do a 50-year. I mean, I don't even like the idea of a 30, a traditional 30. I don't even like that. Because, all your mortgages are front loaded, right? So you're still paying, for the first 5, 6, 7 years, it's all 8 years, it's all front loaded interest. You don't pay a lot on, it's better than a 50. And even if between a 30 and a 50, you're talking what, $250, $300 a month that you're saving. Are you really going to save that money? Let's get real. Talk to me for real. Are you really going to save that money? Or are you going to do what the typical American home buyer does? Are you going to go out and say, oh, we can afford more house, so let's get that $500,000, $600,000, $700,000 home. We can afford more now. That's what they typically do. Not everybody, but that's what the home buyers do. They go out and they go, oh, let me get a little bit more, because hey, why not upgrade, right? Yeah, get that little extra bathroom, a little extra bedroom. Let's do. I like that garage, let's do a little upgrade. Oh, I like this particular area, that particular. Yeah, we can afford a little more, a little nicer. Let's change our zip code a little bit. Let's upgrade, right? Get going with the Joneses here. Let me tell you something. No, not throw no shade on Joneses if your last name's Jones, bro. Much love. No, I'm just saying though. All kidding aside, but if you think about it, really, what you gonna do? Most people always upgrade, or if they do save $200 or $300, do they invest it? Do they put it in a money market, make 7%, S&P, whatever? Mutual funds, do they do the smart thing and put the money away every month, and then over a 10-year period, oh look, I got 20,000 or whatever, 10, 20, $30,000, and then I can take that and throw that down on my mortgage, and boom, boom, boom. No, they're not going to do that. They're not going to do that. Most people are going to be like, hey, we got a little extra cash in our pocket. Let's go this. Let's go do this. Let's go buy this, that, and the other. They just go spend it. They're not going to do the smart thing, because the smart thing wouldn't even get into a 50-year loan anyways. So they're not going to do the smart thing. But that's just my opinion, all right? I'm just saying. That's just me. Just talking real facts here. I'm just saying. I know how people are. I know I'm generalizing. I get it, but trust me, I have a good idea of how people are. And so you think to yourself, this is just a trap to keep you into debt longer. There's a lot better ways. Guys. We can get into that in a little bit. All right. Let's get back to some of these different opinions here, and see the pros and cons from different perspectives here, and see what they got to go. All right. Let's see what they got.
President Trump recently proposed the idea of a 50-year mortgage. Honestly, it's not a bad idea. The average homeowner in the United States only stays in a house about 7 years. So even with a 30-year loan, nobody's holding it long enough to pay all that interest. They move. So why not go 50 years? Lower the payment and actually make home ownership affordable again. Focusing on reducing the price is not what anybody wants, because the name of the game is to make money on the house.
That doesn't address the root cause of why housing is expensive. That does not address. I get where she's coming from, but there's a shortage of housing. Number one, you have a shortage of housing. You have the inflationary spending, from COVID and all that stuff that happened. The surplus, the demand. I mean, it just doesn't. From that perspective, I understand investments and making money. She's coming from a different angle, but it doesn't address the root cause.
So let me show you why I think this makes sense for a 50-year mortgage. Take a $400,000 home at 6% interest. A traditional 30-year loan is going to run about $2,400 a month. A 50-year loan, roughly $2,100. That's a $300 difference every single month. Here's where it gets interesting. If you took that $300 and invested it in the S&P 500 with an average 9% annual return.
That's what I said.
After 10 years,
they know 9%.
You'd have about $58,000. Then at year 10, you drop that $60K onto your mortgage principal. That one move cuts your balance by 60 grand and saves you a huge amount of future interest.
Is that what they're going to do, though?
Meanwhile, your $400,000 home is appreciating, let's just say 4 to 5% a year. That same home could be worth $600,000. Combine that appreciation with your principal reduction, and you're sitting on over $300,000 in equity, starting from just a 5% down payment.
There's a lot that's not right with that.
Here's the key. A 50-year mortgage isn't about keeping it for 50 years. It's about getting in the game, controlling your cash flow, and using time to your advantage. You can always pay it off faster, later, but you can't build equity on a home that you don't own.
Well, she's got some points, but that's speaking like an investor, right? Like a investment banker, or speaking like, it's like a realtor or something. I mean, it's like, I get where she's coming from, but that's not reality. I that's just that's not reality. That's not reality. All right, let's see the next one.
Okay, a lot of y'all are too attached to the 50 years on this whole 50-year mortgage thing. That's not really the alarming part. Like, you don't A, have to take out a 50-year mortgage.
It's
and
true.
B, if you do, you don't have to take 50 years to pay it off. You can pay as much as you want on the principal and pay it off as soon as you want to, money allowing. The alarming thing is, instead of trying to solve
If you can,
the supply issue
right?
or the astonishing rise in home prices issue or the astonishing rise in home loan interest rates issue, they're like, oh, okay, well, things are too expensive and we're charging too much interest. So the solution is to just stretch the payment out for another 20 fucking years beyond what is customary. And what is customary is already, I'm not going to say irresponsible, but like, it's not the best idea. If you can pull off a 15 or, Jesus, even a 10-year mortgage, that's ideal.
Yeah.
But 15, or I'm sorry, 50 is fucking crazy. But like I said, you don't have to take one out. And if you do, you can pay it off as soon as you want. Okay? So you're not married to a 50-year mortgage. Everybody in my comments is freaking the fuck out. Oh,
If you buy a $500,000 home because you can afford it now, and a 50-year loan, you can pay it off as soon as you want. If you're having trouble getting into a loan in the first place, how are you going to pay it off whenever you want? Well, I'll just pay it off whenever you want. No big deal. If that's the case, why don't you just buy a house outright and don't even get a mortgage? If you have the ability to pay it off whenever the hell you want, am I alone here? Am I going crazy? Like, just avoid the banks altogether. The banks are a freaking scam. I'm not a big fan of banks. The whole fiat system and the debt, that's a whole nother video. I don't want to get into that, but you know what I'm saying. This whole perpetual, loaning out money, debt, fiat, creating money out of thin air, and just, willy-nilly, whatever. I mean, it's engineered and designed to keep you enslaved and keep you into debt. So if you got the cash and the funds and the money, just buy the damn thing outright and be done with it. Avoid the bank altogether. The only reason people go to banks is because they ain't got the money. They can't afford it. They don't go to the banks because, I just want to get a bank loan to build my credit. Maybe there's some people who do that, but the majority of people don't go get a loan because, well, I see this car, I see this house, I see this boat or something I want to buy. Well, let me just, instead of just buying it, man, I'll just go get a mortgage. Man, I just want to pay interest for the hell of it. Just for the sake of paying interest. No, people get loans because they can't afford what they're trying to purchase in the first damn place. And if you don't have the money to get it, then maybe you shouldn't get it. Maybe you don't need it. I understand a house because you have to have a place to live and stuff. I get all that. You're trying to get a home. I understand that part. But just in general, needs versus wants, necessities, right? Priorities. That's all I'm saying.
If I buy at 40, I won't pay it off till I'm 90. No, you'll pay it off as soon as you want to pay it off. But also,
as soon as you want to pay it off.
You're even with 30 year, even with 15 year, hardly anyone stays in the same mortgage for more than a small handful of years. You either refinance or you sell and move. Or you move and rent the fucker out and let somebody else pay your mortgage. Okay?
Yeah, okay.
The alarming thing is we've already been over. Instead of solving the issues that led to the affordability crisis, they're just going to stretch the debt out which is not actually going to save you that much money
Nope.
per month. And it's going to cost you almost 3 times as much
Yep.
in interest over the term of that loan.
Yeah.
But the real alarming thing to me, someone who pays attention to all the dominoes as they fall and how it's interconnected, this seems to me like an obvious play to provide an exit ramp for big-time investors, specifically private equity,
BlackRock.
specifically companies like BlackRock,
Oh.
State Street, Vanguard, who
Yeah,
bought
yeah.
up a not small amount of single-family homes.
Yeah, no shit.
Exacerbating the supply crisis, which exacerbates the affordability crisis,
Yep.
all on purpose. I'm of the opinion that these cats are in Trump's ear and are like, hey man, the bottom's about to fall out. This whole house of cards is about to come down. Let's find a way, a loophole, to get buyers to come in and buy our inventory so we can get out from fucking under it before the whole fucking thing comes down. That's what I think is really fucking going on.
It's an idea.
Be very, very careful. Keep in mind, it's my job as a mortgage loan originator to get you in a home if you call me. And I'm telling you right now, I will write that paper and I will collect that commission check with a smile on my fucking face. But just be careful.
He makes some good points. I don't know. Trump is in real estate. He's made a lot of his fortune from real estate, so he knows all the players. I don't know. Makes a point, doesn't he?
So the president and the White House, they are floating the idea of a 50-year mortgage, and it's getting a lot of traction because the American dream of owning a home, it is getting further and further out of reach for many folks in this country. In practice, it's going to be pretty similar to the 30-year that we're all familiar with. You're going to have an interest rate, you're still going to have a down payment. You would just repay that loan over a longer period, in this case 50 years, versus the traditional 30. And it's all about affordability. It is cost prohibitive for many Americans to own a home. The average age of a first-time buyer in the U.S. has ticked up to a record high of 40 years old. I am one of these possible home buyers for the first time. So I did a lot of research. I want to share a big pro and a big con with you. The pro is a lower monthly payment. In a scenario where you've got a $500,000 mortgage, a 6% interest rate, you are going to pay over $400 less per month in the 50-year situation versus the 30-year. The con, though, is you're going to pay a lot more in interest over the life of that loan. In that scenario I just mentioned, hundreds of thousands more in interest alone. And because banks look at a longer-term loan as more risky of an investment, you might actually have to pay a higher interest rate on the 50-year. So it's going to take longer to build ownership, build equity, own your home. You're going to be in debt longer. The takeaway here is critics say you could actually die before you own your home. But proponents say, I want to get in the game. I want to be able to build wealth and even have a shot at owning a home.
Everyone's freaking out about the 50-year mortgage that just dropped, but I think it's pretty genius. And if you're new here, I'm Theoni the lender. I've been a lender for 10 years. I help people every single day from this app buy, sell, and refinance. Let's get into this because I have such an interesting take on this that most loan officers do not share. And I'll start by saying that they don't share the same idea because they're loan officers, not loan advisors like I am. Everyone keeps talking about the amount of interest that you're about to pay over 50 years. And I will say it is pretty crazy. I saw an example for a $400,000 house that it was like 1.7 million in interest or something crazy if you kept that loan for 50 years. But what most people are missing is that the average homeowner in America only lives in their home for 11 years. And that is to say they live there, but they're likely going to refinance the terms of that mortgage. Like the likelihood of you having a mortgage that you get today for 30 years is very low, even if you live in that home for 30 years.
But what they're not explaining to you is that they can't forecast the future. They don't know what the interest rate is going to be in 5 years, 8 years, 10 years. If you want to refinance your home, well, what if it jumps up to 12%, 10%, 8, 15, whatever? You know what I mean? Like, they're not telling you. There's a lot of ifs in there. You're talking about things in the future, like, oh, if you just get it now, don't worry about it because you can just refinance and this and that. You can do all these wonderful things. There's a lot of ifs in the background. There's a lot of things that are like, that they're not really going in depth on. It's like, you know, you can't count on future events and future things. You just can't, right? So, you know, what if this? What if that? Well, you know, okay, take your chances.
And that's because you're going to do a cash out refinance. The rates are going to come down, so you're going to
Oh, are they?
refinance. And every time you refinance, like right now, I'm taking people from a 30-year term to like a 20 or 15-year term. So the idea behind a 50-year mortgage isn't because we want you to be in this house for 50 years. I think that's actually insane that people are even in the same loan terms for even 30 years. The idea is that it gives you breathing room to qualify for a house. And that's the problem that we're facing right now. People cannot qualify. Yes, the savings is like maybe $200
Let's not fix the root
difference
cause.
from a 50-year to a 30-year, but that $200 difference actually makes a difference when it comes to qualifying for a mortgage. I just ran this example with one of my clients. They're trying to buy a $700,000 house. And if their interest rate was, let's just say, worst case, 7%, they're going to be paying like $4,800 for that $700,000 house at a 30-year term. If they got a 50-year mortgage, then they're paying $4,000. But here's the kicker. Their initial budget was like $5,000. So they can still do a $5,000 payment and pay less than 30 years of that entire mortgage. And this is only because this is their dream home. So they're going to be living there for probably actually 30 years. But if you're not going to be living in that house for 20, 25, 30, 40, 50 years, then the amount of interest that you pay in the overall amount is kind of null and void, especially when you're working with an advisor like me.
Right,
I tell my
work
clients,
with her.
if you make $100 more
Null
to
and
the
void.
monthly payment, you shave off like 4 to 7 years of that entire loan term. And of course, you're saving a ton of money in interest by doing that because now you're not paying the interest on the full term. So honestly, this is just like another tool in the toolbox for a strategy that you can use so that more people can just get into a house and then they can figure out that monthly payment.
Right.
If you're looking to work with
just get in the
loan
house
advisor,
first, guys.
I am accepting new clients for the coming.
Yeah, let's just get in the house first. Worry about the other stuff later. Just get in the house. That's the main thing. Just another tool in the toolbox. Just get in that house. You know, that's all you got to worry about. You know, the rest of the stuff, don't worry about it. It's just we'll crunch the numbers for you later. Now worry. Let's just get you in that house. Let's get you in the door there. Unbelievable. Unbelievable. Unbelievable.
Everyone and their mother is talking about this new 50-year mortgage. And a lot of people are saying that it's a terrible idea.
It
Like
is.
everything else in real estate, it really depends. Yes, in theory, you'll pay more interest over time. That's true. But this isn't about paying interest for 50 years.
Oh, okay.
It's about using this loan as leverage. It's a strategy to finally get into the real estate
To
market.
get into debt.
If you're renting today, you're already paying 100% interest.
Oh, okay.
Instead of the bank, you're paying it to your landlord.
Oh.
So for some families, a 50-year mortgage could mean a couple of things. One, you can have lower monthly payments. 2, it can be a chance to qualify. 3, it can be the ability to start building equity today.
Today.
Then, later on,
I mean,
if and when
you know,
rates drop or you
I mean, you know, you're paying interest for the first 10 years and you're not paying any equity at all, providing that the market doesn't go up or go down, depending on what kind of market you're in and the interest rates and everything else. No. But you're going to start building equity day one.
improves, you can always refinance the loan and get out of the 50-year mortgage.
Sure you can.
The key here is not to use this to buy a bigger or more expensive house. It's to use it wisely as your door into home ownership. So, instead of saying it's good, it's bad, or listen
I'd
to
rather
your
sleep
cousin,
in a
your
tent.
tío, the guy on TikTok, you gotta ask yourself, does this program make sense for my personal situation? The goal here isn't getting a 50-year mortgage. The goal is to own a home and start building wealth today. So, if you want, I can break down what it will look like for
You know, yeah. Let's look at some let's look at some other opinions here, guys.
Is a 50-year mortgage a good idea? I took some notes down so we can compare a 30-year mortgage to a 50-year mortgage. If we had a 30-year loan on a $400,000 house at today's rates, you would have a $2,660 monthly payment. If you were to get a 50-year loan on that $400,000 home at today's rates, your payment would drop to $2,380, saving you $280 a month. Principal per payment. This is saying how much of your mortgage payment is actually going toward paying off the loan. On a 30-year loan for that $400,000 house, you'd be paying off $327 per payment. With a 50-year mortgage, though, you'd only be paying off $47 per payment. Total interest by the end of the loan. At the end of the 30-year loan, you will have paid $957,600, $557K of that being interest. On the 50-year loan, for the same exact house, you would end that 50-year period paying $1.713 million, $1.3 million of it being interest. And last stat, if you were to own that home for 10 years with a 30-year mortgage, that $400K home, you now own $56,000 of it. You have $56K in equity. But after 10 years of the 40-year mortgage, you'll only own $14,000 worth of the home. You won't be able to refi, you'll hardly be able to sell, and by the end of it, you will have given the bank 3 to 4 times the amount of your mortgage. A 50-year mortgage is an awful idea.
Guys, Trump just announced that they're working on a 50-year mortgage. Now, is this the solution to the housing crisis, or is that a lifetime of debt? Let's crunch the numbers. The average person buying a home today is about 34 years old. So by the time they pay off
36.
a 50-year mortgage, they're 84 years old. So math aside, they're going to put you in the old folks' home before you even own this home outright. Let's say you took out a $400,000 loan on a 15-year mortgage. Well, all in all, that loan will cost you $569,000. That's $169,000 in interest. Now let's move to the 30-year loan. That 30-year loan is going to cost you $863,000. So you're still looking at twice the cost of the home plus a little bit just to pay off that home in 30 years. Now let's move to the 50-year mortgage. Well, that $400,000 loan is going to cost you over $1 million in interest alone. Get this, you're going to pay $1.44 million all told by the time that 50 years is over. And by the way, you're 84 years old. That's
if not 90.
6 times as much interest as a 15-year loan, which by the way, on a 15-year, you own that home outright by the time you're 49 years old. If you just make the payment.
Now you're talking real wealth.
With a 50-year mortgage, you're asking for a lifetime of debt. And here's a bunch of other reasons why this is a terrible idea. You barely build equity. You're basically just renting from the bank forever. Here's why. Most of your payment is going toward interest, not principal. The longer you stretch out the loans, the longer you're going to pay interest. So here's the deal. It's going to take you 25 years just for more money to be going to the principal versus interest. That is insane. Next up, it's going to drive home prices up, not down. Here's why. More people can afford homes, therefore homeowners can demand more for that home. So when you increase demand and you have the same amount of supply, you're going to see prices go up. And the other thing is, banks, lenders, and investors don't want to wait half a century to get their money.
That's
so what this means for you is higher rates and way more fees baked into the cost because you are a risky borrower. So here's the truth. The 50-year mortgage doesn't solve any part of the housing crisis. It's only going to make it worse.
That's
because you're going to be making that last payment from the nursing home. So stick to a 15-year loan that's going to actually help you build wealth. A 30-year loan will delay it. A 50-year mortgage, well, you're not going to be owning anything in your lifetime. You'll just be owing.
They're overwhelmingly, 99% against it because it's just a bad idea. It's just a bad idea. I don't care how you try to spin it, unless you're a bank investor or you're some kind of real estate investor or, it's just going to make everything get more expensive. The prices they're going to ask for more. They're going to ask for more because now you can afford more. They're going to ask for more. The surplus and demand, there's not enough housing out there, and it's just simple economics, guys. All right, it's all it is. Supply and demand, dude. It's we got to address the root issue, and you can't just spread it out, kick the can down the road, spread everything out like, oh, we'll just make it easier to get into a trap, easier to get into debt, easier to what? Not even have generational wealth, not even be able to enjoy. I mean, the American dream is now getting further away. It's insane. It's insane. But that's my opinion, right? That's my opinion.
The 50-year mortgage is a fucking joke. It's straight. It's a joke. An average home in America right now is $420,000. Average home buyer's 40. You be 90 years old. If you make it to 90, average American lives to about 70, 80. You know what I mean? Like 78, 79, 80. By the time you like 85, you're not even the same no more. Your dementia, y'all messed up. Bruh, if you are healthy, you in debt still. Think about this. 50-year mortgage is freaking crazy. A $420,000 house, you paid $1 million for it. You paid 3 times for the house, not including maintenance. What? It's a joke. 30 years is already crazy, right? But that's just what we got to do, because it's a shame. The only people getting 50-year mortgages is nepo babies. But anyways, 30 years already allowed. 50 is crazy. A 50-year mortgage is a debt trap. It's set up a generational debt. A generational debt. If you sign up for a 50-year mortgage, stupid.
In case you haven't heard the news, something major is being proposed. So that's a 50-year mortgage, okay? Traditionally, we look at 30-year mortgage options, but the White House is proposing a 50-year option. And you may be thinking, that's going to help save me money at the end of the day. What does that look like? Well, I'm glad you asked, because I'm going to share it with you. So let's take a $400,000 loan on a 30-year term at 6.5%. You're paying just over $2,500 a month for your principal and interest. However, if we do that on a 50-year term, you're about $2,254, which saves you about $273 a month. And you would think that's great. You might be saying, well, Jordan, that's wonderful. Like, that's a good chunk of money to help me save every month. And you would be right. However, let me give you a little bit more information. So let's look at the whole picture. On a 30-year mortgage, in total, you would pay roughly $910,000. The interest portion of that $910,000 would be about $510,000, okay? However, if you look at a 50-year term, $952,000 is going towards interest, which is a difference of $442,000. At the end of the day, if purchasing a home is on your list of things that you want to do in this life, then I am for sure the person to call and help you with that.
I'm telling you, it's a bad idea. They don't even factor in, like, after your PMI and everything, and when it's all settled, usually you'll get a bank note, and it'll be like, you owe so much a month, right? And that's the first year. The second year it changes, because once all the paperwork comes in for your particular township and your city where you live, then they reassess your taxes and everything else that gets adjusted, right? Because every time you get a new home, it's all based on the value of the price of the home, your taxes are, and they prorate, or they estimate it or prorate it until the cycle's around for another year, and then they get the real number, and then your payment shoots up. Oh well, we didn't, your escrow, it was short $2,000 because they didn't rate it properly, or it was prorated, or the whatever mills passed or whatever. So it's like, oh well, we got to adjust that because you're short. So then you have a new payment because they'll adjust it, up your payment to cover the amount that you were short, and then now going forward, here's your new amount, and that could be $500. All right, so say, hey, if I do this, I can save $300 or $400 a month. I'm able to make my house payment now. You get in and everything's great for the first year, until all those prorations come around for the second year, when you get tax season comes around and they send out the new tax bills, and they come around for your escrow. Oh, we got to increase it by 400 or 500. Well, there goes your 400 or 500. So if you're so tightly budgeted, like, hey, if I do a 50 versus a 30, I can actually lower my house payment. You get what I'm saying? I can afford this house. Yeah, let's get this house. Okay, yeah, great. Let's get you in the home. Now you're good to go. Everybody walks away happy. Bank's happy. Everybody walks away. Hey, congratulations, you're a homeowner. Yeah. A year later, they're nowhere to be found. You're one stuck with what happened? Why does my escrow go up? I could just barely afford this payment of, I could barely afford $2,500 or $2,000. And now my escrow went up by $500. Now I'm right back to square one. I can't afford this. Yeah, banks don't care. Yeah, hey, got to pay it. See what I'm saying? They don't factor in actual real life. What happens when all those things come into play? You know what I mean? It's absolutely 100% stupid to get into debt and to go and try to spread something out as far as 50 years. It's insane to do it. I'm telling you, unless you're an investor. If you're an investor, banker, or if you're, you write mortgages for a living, and you're, doing all these, if you're in the industry, in the business, and you want to, you know, sell a real estate, and flip and sell, and things of that nature, yeah, sure, you can kind of snake your way through it, and make a profit here, make a profit there. But for the everyday, mom and pop, everyday home builder, everyday individual, especially the younger generation trying to get into a home for the first time, home buyers, don't do it. It's insane. Either rent, or go get a small trailer, a modular, go live in, whatever you have to do, and save the money. Hell, I'd live in a van, dude. Before I did that, I would go, and I, trust me, I've been there. I've had, really bad, crappy places. I've rented. Dude, I've been there, so I know what I'm talking about. You know, I'm not like I've bought and sold homes. I've had crappy homes. I've rented houses. I've lost houses to foreclosure. All right, I was down and out. I wasn't always, oh man, just having the best of everything. I've been there, dude. I can talk from experience. I've lost a house to foreclosure because I couldn't afford, I got in over my head. I've had to do those things. You know what I mean? I've been in debt. I mean, dude, I'm telling you. I know from experience. So it's a stupid idea. Just saying. My opinion, don't do it.
If you are age 50 plus and you are trying to get a mortgage, if you can't put down no less than 40%, my advice to you, don't even get a mortgage. Don't even get a mortgage.
I like this guy.
Get trapped into a 30-year mortgage, even 20-year mortgage. Don't get trapped under that roof. If you are 50 plus and you're trying, if you don't have 40% down, hey, boom, that's 40%. Now, okay, I want a 10-year mortgage. Leave that shit alone. Don't even try. Number one, your mortgage rate will be high because of your age. And who promised you you're going to live 30 more years on earth? Who promised you are going to live 30 more years on earth?
That's truth.
Everything about you will go up when you get that mortgage. You're stuck. You're stuck. You're stuck. You're stuck. You're stuck. You're stuck. You're stuck.
That's why I'm afraid, yeah.
And on top of that, you have other bills to pay, like we all know. Don't even try to get a mortgage. Find a spot, rent that spot, stay down. Okay. No one promised us tomorrow. Life
True.
is short.
Yes.
Shorter than you think.
Oh, yes. That's a fact.
Shorter than you think.
It's got some wisdom
People
on
just
them.
go into bed and they never wake up anymore. Some people really delusional think they're going to live until. Okay. If you are age 50 plus and you're not in a house yet, keep renting. Find yourself a good spot, rent that shit out. Rent. It make no sense at all. But people are doing it.
Yeah.
People over the age are still renting, still mortgaging, trying to get a mortgage. Ain't that a bitch? Oh, fuck no. Life should be more than just a mortgage. Life should be more than just a 9 to 5.
You got
Life
that right.
should be more than just getting up, going to work.
Speak it, brother.
You can't even enjoy what you work for. Man, come on. Think about it.
True.
Think about it.
True.
You can't even enjoy what you work for. All you're doing is working to pay the bills. Working to pay the bills. And you mad as fuck because the bills ain't stopping.
Facts.
Have you ever been in this situation where you were sick and you pay a bill and the next bill come? The next bill come. It's like, God damn, I'm sick. Give me a moment. God damn it, give me a moment. It's just one cycle. And we home in these houses, we have all kind of channels. HBO, Cinemax, this, that, this, that, this, that, this, that, this, that. Man, fuck. Cut them shit off. Okay? Downsize where you can enjoy your life.
I love it.
You don't need to be living for the Joneses.
Yeah? Yeah?
Because you don't know how much they're struggling trying to keep up.
Yeah, they're struggling too.
You know, some people walking around smiling, but they're going through some shit. They're going through some financial shit.
I love this guy.
Keep up with them. But you don't know what they got to go through to keep that. And you envying them. And some of you are doing better than them.
Facts.
Okay. People ain't gonna tell you what they're going through.
Yeah.
They ain't gonna tell you what they gotta do to keep that shit running. Okay. Enjoy the moment, enjoy life. Stop and enjoy life. My advice.
I love that guy. That's some wisdom. That's some wisdom, bro. You see that white hair? That's called wisdom, brother. I mean, I'm telling you, he made some points, right? We're going to stop it there, guys. I appreciate you coming back. Appreciate you hanging out. And, some food for thought, guys. I mean, 50-year mortgages, man. It's just another way to go into debt and enslave you and keep you down. It's not really building any kind of generational wealth at all. It's just a temporary band-aid to fix a problem that no one wants to seem to address. It's unfortunate, and I feel sorry for the younger generations, man. I really do. It's just, I got kids, I got millennials that are my kids, and they're renting and struggling, and I mean not struggling because, thank God, they've done pretty well, but my son in general, he's an electrical engineer. He makes 6 figures. He makes good money. And he's 32 years old, still renting, can't looking for a home right now, trying to get a home, trying to find a house that he can get into that he can afford. And he's an electrical engineer, dude. He makes really good money. Him and his fiance there, they work, they make really good money. And it's like, back in my day when I was his age, electrical engineer, whoo, bro, you had it made. Yeah, it's sad. Times definitely changed. They're not what they used to be. Anyway, guys, appreciate you hanging out. Appreciate you coming back. Thanks for the likes, shares, and the love. I appreciate it. Leave a comment below, guys, what you think of 50-year mortgages. If you think you'd like it, if you wouldn't like it, if you think you'd go for it, is it something that you would do? Let me know in the comments below. And just make sure, guys, help the algorithm out when you do. And like, sub, and subscribe, man. I appreciate you guys. I will be back for the next one. And until then, take care of yourselves. All right. Till next time. 50-year mortgage. Dude, there's no freaking way.